Okay, good morning, everyone. Thank you very much for joining United Capital Free Zoom Investment Clinic. We shall commence at exactly 11 a.m. Thank you.
Over it on his FCRT presentation on www.net/ARES.
Good morning, everyone. Thank you very much for joining the Free Zoom Investment Clinic. My name is Omojola Shewanjorinde, Product Manager for InvestNow. I'll be moderating this session. We're all happy to have you here with us. Please feel free to interact with us. This is going to be an interactive session, so if you have any questions, please raise up your hand or put it in the comment section. We'll pick it up from there. Just before we start, I would like to just states that please all mics should be mute while the meeting is in session, so we don't disrupt or interrupt the people that are currently taking the class. Just before we go into the session, I want to ask here if you are all familiar with United Capital brand. So if you're familiar with the brand, you can just raise up your hand to let me know that you know who we are. Okay, thank you, Ahmed. I can see your hand up. Okay, just for the sake of those that don't know United Capital PLC, I'll just do a brief intro about the company. With me today are my colleagues, and we have a special guest today. So our special guest today is the MD of Assets Management, Odiri Ogini. She also will be sharing her investment journey and give you 1 or 2 tips on how she has been. Okay, so United Capital is one of Africa's leading financial services group. We offer investment banking, assets management, securities trading, trustee services, wealth management, and consumer finance. We're formerly part of UBA up until 2014, following CBN directive that all banks should divest from non-commercial banking activities, and we are the only investment banking group listed on the Nigerian Stock Exchange. With 50 years experience in financial services, we are able to meet your long to short-term financial goals. And of course, we are very much happy and available to guide you on the right path to financial freedom. So I'll just want to ask you all a particular question, and I want you all to think about it. So at the moment, are you investing? Are you investing as much as you should? If an emergency comes today, do you have any money to fall back to, or are you going to be having issues to maybe raise funds and everything? So I'll just hand over to Odiri to just share her investment journey with us and give us 1 or 2 insights into how to reach where she has reached. Thank you very much. So Odiri, over to you.
All right, thank you, Jola, and good morning to everyone. Welcome you to another free investment clinic organized by United Capital. Jola has given a brief introduction of the United Capital Group businesses. So I just want to share about 4 key points about investment before we go into the investment advisors. I will share much details about the investment opportunities that we have within United Capital. So first of all, investment is I call it a journey. Investment is a journey. It's not a 100-meter dash. It's a marathon. You know, when you're going on a trip, when you're going on a journey, you start from point A, and then you know where you're going to, and then you get to your destination. So as a journey, it requires having a plan based on where you are currently in your investment appetite, looking at how much you have within your maybe based on your business or probably your salary, your earning salary. So it's a journey and it's a process. And beyond being a journey, it's also a personal decision. So my investment portfolio would definitely be different from the next person's investment portfolio. But you know, sometimes I hear people say, "Oh, I want to do this investment." Why? Because my friend. Sorry about that. So I said earlier that investment is a journey and it's a personal journey. So for me, I started investing when I really started working and earning some funds, even though here and there while in university, while in school, I started investing. But really my major push for investment really started when I was earning money. At least, you know, you are earning something on a regular basis, month on month, rather than maybe pocket money that is given to you or money is given to you by friends and family members. So what I did was to determine where I want to be in that investment journey, depending on where I am. So when you start out on your investment journey, you look at, okay, what are my responsibilities now? This is what I earn every month. I take out what I need to, my obligations in terms of responsibilities, family, church, God, and then what is left, I say, okay, let me invest. That's how people start out. But most times, the investment should be at the beginning part of before you begin to distribute. Because if you don't do that, you realize that at the end of the day, when you have paid everybody, you have nothing left for you to invest. So investment is a journey and it's a personal journey. And then the third thing I want to share is that every investment requires an element of risk. Every investment requires an element of risk. So for investors, what you need to really look at is at what level of risk do I want to engage in? There are investment opportunities that have little or no risk. There are investment opportunities that have maybe much more higher risk. There are investment opportunities that are really very risky. But all investment requires a risk. And the only way to mitigate and manage your risk is the knowledge about the investment opportunity that you are engaging in. And then the last I will say, which is what I've said before, that investment is not a 100-meter dash. You know, when people begin to see investment as a 100-meter dash, that's when they begin to look at put your money now, get double or triple the return in 45 minutes. But because investment is a plan, investment is a process, investment is a journey, you need to look at starting from a point and walking that point consistently, deliberately, and over time, you will get to a point that you really won't believe that, oh, I could get here in a deliberate fashion, rather than saying, oh, let me put this big money down now, and then, or put it in an opportunity that will give me return, significant return in a very short time. That's not investment. That's what we call gambling. You know, that's what we call, in quote, MMM. You know, but for United Capital, we have a team of client advisors that will be speaking to us on the various investment options that we have within the group, from the low risk one to the much higher risk one. And then depending on the level that you are in your investment journey, you can begin to see, okay, this is what will fit my profile at this point in time. This is what will fit my profile in a few years' time. This is where I'm in years to come. So without taking much time, I'll hand over back to Omojola. Thank you very much and happy listening.
Thank you very much, Udiri, for that insightful intro. I sure learned one or two things from what you have said. Okay, so we're about to commence our session. I hope you all have your pens, your biros. Please feel free to send us a message in the comment section. We're going to pick it up from there. And if you want to speak with us directly, please raise up your hand. Please don't forget to mute your mics. We don't want any interference or distractions during the class. Okay, so we're going to start with the head of digital business, Damilare Meshimo. He'll be taking us on how to use our investment tool Invest Now. So Damilare, over to you, please.
All right, thank you very much, Jola, and welcome everybody to this session. Thank you so much, our MD, for the introductory remark. And like Jola said, I also learned a bit from that very short introduction. So my job here is very simple and is straightforward. While my colleagues would introduce you to the best product for you at this time, I will just speak about where you can actually do all these transactions. So they will tell you this is the best retail product for you. If you have this, if your risk appetite is very low, this is what you can do. If your risk appetite is very high, this is what you can do. For a retail business, this and this is what you can do. So while my colleagues will take you through that process, I will just let you know that, okay, once you've made up your mind as to what investment you want to go into, this is the platform for you to do that. Okay, sorry. I was connecting from two different devices, just in case my network had any problems, because I don't want a repeat of other sessions. All right, so back to what I was saying. So while they discuss that, we'll discuss about the platform. Now, if you know about investment banks, regular, what they look at or what they focus on sometimes is on HNIs or corporate and the likes of it. And United Capital, what we've chosen to do is to say, you know what, let's look at investment banking in another dimension. So while we focus on HNIs means high net worth individuals, while we focus on corporate and organizations, let's also look at the retail space. There are some guys who have just 100,000 naira, and they believe that because I have 100,000 naira, the investment banking firm will not even deal with me. Some guys believe that, oh, because I don't have 1,000,000 naira, these guys will not deal with me. And as such, what they do is they just forget about their investment and say, you know what, I'm taking my money to the bank instead. But what we're saying here is what you can do. You can bring this money to an investment banking firm. So what platform are we using today? We're using our Invest Now platform. Our Invest Now platform works both on the mobile and it works on the web. So you can, if you are the guy who likes on the go are the guys who use the mobile app. If you are the guy who says, you know what, I want to be able to open my laptop and do my transactions, then that's the web for you. I used to work with a boss who would tell you that, see, I cannot deal with mobile apps. I want to do a bank transfer. I need to use my internet banking platform. So there are different people with different styles. So like I said earlier, if you're on the go, you can use your mobile app. If you're the guy who wants to open his laptop or his iPad or anything, then you can use the web version. Now, once my colleagues are done and they've told you the best product and you have agreed on what products you want, when you come to Invest Now, if you're a new user, the first thing for you to do is to create an account. So Ori Ajayi will come up and tell you about mutual funds, and he will tell you the various mutual funds we have. Once you decide that you want to open a mutual fund account, once you go to Invest Now, Jola, can you move the screen to where we have the account opening? So once you go to Invest Now, and you see, once you go to that platform, you will see mutual funds. Click on mutual funds, and you will see the different mutual funds that you want. Like I said, our client advisor for mutual funds will speak on that. So once you just select the mutual fund you want, you then fill out the form, and you are good to go. Now, I would just want to put in this here. Once you fill in the form and you click submit, within 24 hours, you will get an email from us asking you to provide us with additional information. Once you provide us with additional information, your account will be opened immediately. Now, if you choose to go with trust, you say, you know what, I want to open a trust account, maybe Heritage Trust for my child, maybe this, any or private trust. Once it's trust you want, go to that same part, you will see trust beside it. Click on trust and choose what trust account you want. Go through the same process and you'll hear from us within 24 hours. If you choose to say, I want to trade on the floor of the stock exchange, just click on securities. So you won't see stock exchange, you won't see shares, all you will see there is securities. But you click on it and you open a securities account and follow through the same process. Right. So that is how the account opening works on Invest Now. And that's for those who are new users on this platform who have not tried Invest Now before. Log in www.investnow.ng, select any product you want, fill a simple form. That form will not take you more than 2 minutes. Once you're done, click submit. Additional information, once you're filling that form, please ensure you have your BVN with you, because you have to fill in your BVN. Ensure you have like a passport photograph on your phone or any photograph you can just attach, and also ensure you have your valid ID card. Valid ID card might be international passport, voter's card, any government issued ID card. Just have those, any of those on standby while you're filling the form. Now you are done filling the form, your account is opened. What is the next thing for you? The next thing is to begin your investment journey. And how do you begin your investment journey? Is by funding your account. I'll give you a good example. I have a client on my platform today who every day, I think she has 3 kids or 2 kids on herself. So what she does is every day, she does 500 naira every day. So that means 1,500 naira every day, 500 naira per person. So that's 1,500 every day. That's what the woman does. So imagine 1,500 multiplied by 30 or 31 days. She has figured that, you know what, I can't be dropping bulk money. I would have put this money every day gradually. So the next thing for you to do is to fund your account. If you have a lump sum, you can bring it at once and say, United Capital, I just made this 100,000 naira. I don't want it to sit idle in my bank account. Please invest for me. You pay into your account. Or you say, United Capital, I don't collect salary. I'm on wages. My money comes in every day. So if I'm receiving 10,000 naira every day, I want to put 1,000 naira in my account every day. You can do that on that platform. So it's simple. You go to the platform, you click on funding. We're sorry. I think what we should have done was to share a dummy screen of our investment. We're very sorry about that. But after this class, what we'll promise you is we will send you a step-by-step guide, screenshot on how to fund your account, how to set a recurring funding. Madam Moderator, please, let's take note. So after this session, we'll send to everybody. So like I was saying, you fund your account. You can fund your account using your bank card, MasterCard, Visa, or Verve of any Nigerian bank. And once you fund your fund your account using your card is saved. So that means we are coming back tomorrow to fund your account again. You don't have to start carrying your card up and down. Just go and click on saved card. Now somebody will say, oh, I'm afraid. When somebody goes to my account, remember, when you are opening your account, you put a bank account number for us to be crediting or debiting. If somebody takes your card and says, you know what, I want to fund your account, the money is going straight into your account, not the person's account. Nobody can add an additional account number to your profile. It's not possible. It's only you that can do that. And even for you to do that, we need to approve it. So don't worry, our platform is secure. So once you're done funding your account, so you funded your account to your card, some people say, I don't carry bank cards. You can fund with bank. When I say fund with bank, we have two options there, card and bank. Bank means once you click on bank, we'll give you a drop down of the banks that are available on our platform. Click on the bank you want and continue your transaction. So I've said two things now. The first, open an account. Once you don't open an account, the next thing is to fund your account. I think I should even start with, before opening an account, the first thing is the clinic that we have today. So you get the investment advice from our advisors first, and you make a decision. Once you make a decision, the next thing is open an account. Once you open an account, the next thing is fund your account. And I said under funding your account, you can fund your account one-off to say, I made 100K, I made 200K, or I even made 10,000 naira, or I even made 5,000 naira. Please don't let them confuse you. It doesn't have to be 1 million, 10 million. If you even make 500 naira, let me tell you my small secret. In the name of ensuring that the platform is okay, almost every day, I transfer 100 naira to my account. That's my little secret. So I tell Jola that, Jola, I'm testing the platform today to be sure that it's working. And I'm putting 100. My 100 naira, in the last 8 days, I've accumulated to 2,610 naira. In the last, okay, I had a 10 naira balance there before. So I've accumulated to 2,610 naira. So don't let anybody tell you need 10 billion, 5 billion to start an investment. 100 naira every day, 500 naira every day. By December 31st, it makes a whole load of sense for you. So open an account, fund your account on the platform, either with your card or you click on the bank option and choose the available banks to fund your account. Now you are done funding your account. What do you want? You want to monitor your investment. You want to see how your investment is doing. So just go to the same platform. Once you log in and you're on the dashboard, the first thing you see there is your investment. So it means that if I come in today with 10,000 naira, when I come back tomorrow evening to that investment platform, I should not see 10,000 naira. I should see 10,001 naira, 10,050 kobo. There must be something on it. So when you are seeing that, oh, I put 10,000 yesterday, you see 10,000 today, please let us know. I always say things to our classes that, you know what, sometimes technology might fail. So just tell us that, this something has happened, please help me check, and immediately we'll check and rectify if need be. But I can tell you from experience, if that will happen to you at all, maybe it will happen to you once in 5 years. If it will happen to you at all, maybe once in 5 years. Not 5 minutes or not 5 months, once in 5 years, or even once in 10 years, it's going to happen to you at all. So I'm going to be rounding up now because the basic I wanted to speak about was just for us to open an account on the platform, for us to fund our account on the platform. Open an account, fund an account, and monitor your investment. Then they've told you what to do already. They've told you the best investments to go to. And you've been hearing from people, oh, okay, you have a mutual fund. What did you open? Say money market. And why not try bond fund? Why not try this? On the platform, there is something about research. Just go to the research part. You will see daily research guides. You see different things. Just click on what you want and you continue. So, as I conclude on this session, please, if you have any issue with Invest Now, we're available to provide you support. I'm sure the moderator will drop our contact details, email, WhatsApp number, telephone number for you to reach out to us at any time. And lastly, before I go, you can make extra money with your Invest Now. We are telling people small salary with Invest Now. So we have one thing called Invite and Earn. So you're a user on Invest Now today. You invite your friend to say, Oga, come on Invest Now. Once the person uses your referral code to open an account, we pay you small change. So imagine your small change multiplied by 10 every day. You're already making money for petrol. No, petrol is now 150 something naira. Your money for petrol is already sure for the week. So like I said, we'll be sending this group a step-by-step guide on all the features. Thank you very much for listening to me, and I wish you a very productive session. Thank you, Jola.
Thank you very much, Damilare, for, of course, the intro. I got two things from what you said. The first one is, on Invest Now, you can open an account, you can fund your account with no human intervention. The second one is, you don't need to start with big money. You can start with as little as 5,000 naira. You can start your investment journey with as little as 5,000 naira. Thank you very much, Damilare. So quickly, we shall move to Ore Ajayi, who is the head of retail and digital sales. He will take us through how we can use mutual funds to grow our investments. So Ore Ajayi, over to you, please.
All right, I was on mute earlier. Good morning, everyone.
Good morning.
Right. Yeah, thank you, Jola. So I think we're all making the right step in on this session today. My co-presenters already mentioned some very important, vital facts about investing. I think it's a very personal journey. I think it's something that you need to consider and take time to, reflect and say, hey, why am I investing? I think in everything we do, there must be an objective. What is your expected outcome for going on this journey? So I'm sure everyone has an expected outcome from this session, and I hope we're able to meet and answer all the possible inquiries you might have as regards, reaching that financial goal you personally have. But before I go into the various products and services we have at the asset management and speaking to mutual funds in particular, I think it's very important that we debunk certain myths that we all personally might have. One of them being that you would lose your money once you invest. I typically get this with a lot of people, that they assume investments is pretty much associated with loss of capital. There are various investments that we'll be speaking to today that would not require you losing any form of your investment at all, and you will just be getting accrued interest or accrued returns on these various investment instruments. Another one that most people have is also that investment is difficult. They believe you need some special knowledge, some expertise. Funny thing, you guys will realize by the end of this session that investment is pretty much as easy as what we had taught back in primary school, which is principal times rate times time. That's literally what investment is. It's pretty easy. It may look very sophisticated when you see, all the technical terminologies, but everything still refers back to that very basic principle we all learned in primary school: principal times rate times time. Right? So we can all just calm down and listen to the various points from all the presenters today to get a better understanding of these products and services. So I'll be starting today. Oh, another thing I wanted to mention, I thought would be very important while going on this journey. There are certain things I think we should understand about your personality as an investor. First of all, how much liquidity do you need? Right? How liquid are you as a person? What kind of liquidity do you need? How do you earn your income? Are you a salary earner? Are you a business owner? How much income do you need? How long can you invest for? These are personal questions you would need to answer during this session, and that will guide you to which investment you should make. Also, the other thing you also would need to consider is how much risk am I willing to take? As the MD of the asset management business also referred to there, every investment has some form of risk. You just have to decide what level of risk you can take personally. But good thing you will note from this session is the 3 products I'll be speaking to are all low risk investment, which means your capital is preserved. So you can write that down, your capital is preserved, nothing to worry about. All right, so let's get this started. I'm pretty excited about this session personally. So we'll start with our Eurobond investment, which is up on the screen. So the question is, I was trying to take it back. What is a mutual fund in the first place? So a mutual fund basically is a collective investment scheme. And what this simply means for you is we're going to take your money and join it to other investors' funds to make investments on your behalf. We, the fund manager, will do that on behalf of all the investors we have. And the question I would typically get is, why would I want to put my funds with other people as opposed to doing my investment alone? And this is why you put your money in a mutual fund. Very easy. Bargaining power. So I'll give you a typical scenario. If you were to approach your bank to do a fixed deposit, and you had the sum of 100,000, 1 million, whatever the case may be, you will be getting a return which is pretty low, let's say something around 2-3%. But if you have a collective investment that is warehousing sums in the size of billions of naira, and they approach that same bank for a fixed deposit, they'll give them higher. So if you were getting 2% as an individual, the collective investments would be getting something like 6%, 4%, 5%, something double what you would get personally, typically, right? And that's the essence.
I think Aura is breaking. Aura, can you
hear me? Can you hear me? Sorry, maybe it's Jola's internet. Can everyone else hear me, or is it my internet? Can someone else please just respond if I'm audible?
All right, you're audible. We can hear you.
All right, great. So I think it's Jola's internet then. Right. So the collective investment scheme would typically get something higher than what you would get personally. The other thing you would also consider is liquidity. If you make an investment on your own, you would usually have to wait for the maturity period. So if you did an investment for 90 days, if you did an investment for 1 year, whatever the instrument is, you will typically have to wait till it matures before you get your money back. However, if you invest in mutual funds, they are very flexible to offer you quicker returns, easy redemptions in due time. So those are the advantages of doing a mutual fund. Liquidity and of course higher returns. So that's the essence of doing a mutual fund. Mutual funds can come in different forms, right? We have the dollar-denominated ones, we have the naira-denominated one, and we have various peculiarities. So the first one I'll be speaking to today is the Eurobond Fund. This is a dollar-denominated investment. The targets for this particular investment, for me, I think is pretty broad, and I think it should really be everyone. Some people think it's only people that have dollar-denominated obligations, such as you're paying school fees in the US, or you're a businessman, you need to buy your raw materials and whatnot. However, I think this is a category that everyone should be in, and this is why. One of the key tricks to investments is, first of all, diversification. You need to hedge potential risk. We've seen what has happened with the naira and the dollar in recent times, and how the naira has been depreciating over the years. If you're someone that preserves your capital by investing in a dollar-denominated assets, right, you have been able to preserve your wealth, and that's very key for every investor. So that's why I said the target audience is literally everyone. I think if you're someone that is looking, you have some naira assets already, it's a good time for you to start hedging some of those potential devaluation risk and have some dollar-denominated investment as well. And the Eurobond Fund will help you with this journey and with this objective. It's a very liquid investment with a minimum of $1,000, and a minimum holding period of 90 days. You can start to benefit significant returns. This investment year to date is doing about 7%, which means people that started investing with us from the beginning of the year have received returns of as high as 7% on the dollar. Can you imagine this? Right? Typically, if you didn't invest this money, your funds would be receiving nothing. And if they were not even receiving something, they'll be receiving 1-2% in alternative form of investment. So it's very, very critical that you take advantage of this product that is available to everyone. So, redemption usually takes about 2 to 3 working days due to the fact that moving dollar around within the country usually takes some time because you have to move it to a correspondent bank in the US before it returns back to Nigeria. So, other things you could do with the investment, you could always top up a will, right? And of course, as I said earlier, you have easy access to your funds. And the key thing here too also is accountability or transparency. You'll be able to see everything using the Invest Now application or web platform that my colleagues spoke about earlier, to be able to monitor your investments and to also make a request for your funds as at when due. Please note that we do not accept cash investments for the Eurobond Fund. We would need you to do some form of transfer into the fund account whenever you want to make your investment. So you can walk up to a bank and pay cash into our account. We do not accept cash for any of our investments. All right, please, the next product, please. So we have our bond fund. It's pretty much mirrors what the Eurobond does. It's just that the key thing here, this is Naira denominated. With as little as 10,000 Naira, you can start investing in the bond fund. The minimum holding period is equally 90 days. And the current return year to date is about 8.2%. This is one of the highest returns you can possibly get in the market, considering what has happened in the market as regards, alternative form of investment, such as treasury bills, fixed deposits that returning pretty low at the moment, between the ranges of about 1.9% to about 4% thereabouts. So this is a good opportunity for you to still get aggressive returns while still preserving your capital. So the key thing to know from this investment is the minimum holding period being 90 days, which means that we expect you to invest these funds with us for at least 90 days, and you'll be getting this form of returns. Please bear in mind that these returns are annualized returns. It's so that you can guide your expectation. I said, key thing being here, principal times rate times time would help you figure out what exactly you should expect as regards making this form of investment. We do pride ourselves on same-day redemption on this particular product. So if you do make your request early enough in the morning, before noon, you should get your funds on the same day. But if you make it afternoon, you would get it on the next business day. So those are the key features on this particular product: significant returns, safety, and quick redemption. The next product is money market fund. Jola, please. So the money market pretty much still does the same thing the bond fund does, but the thing about the money market fund is it offers higher liquidity. Liquidity in the sense that the Eurobond usually takes about the minimum holding period is 90 days, while that on the money market is just a month. So it offers you higher liquidity. So if you're someone that needs to turn over on a monthly basis, you need funds repeatedly, then this will be your ideal product. And for me, this is pretty much your savings account. We can all see what's happening with our interest rates on our savings account that has been dropped, right? That's been dropped significantly. So if you really want to get value from saving and keeping your funds static or somewhere, then the money market fund is the most ideal place to warehouse your funds. This really much mimics what a savings account would offer. Minimum duration is 30 days. Minimum initial investment is 10,000. After which you can make subsequent investment in multiples of 5,000. So you can do 5,000, you can do 10,000, you can do 15,000, 20,000. So some people use this as a daily plan. Some people use this as a monthly plan. You just really need to figure out where you belong in all this. As I said, you need to monitor your cash flow and say, hey, do I want to make monthly deductions? What is my objective? Some people's objective would be their house rent. So we have people opening multiple accounts. So people, might open accounts for different objectives. So you have people that want to do investment towards their house rent. So they know, okay, monthly, I want to set aside 20,000. I want to set aside 100,000. And if I do this interest, I would have this much. It helps you to plan. If it's not a rent, it could be a car, it could be a travel trip, whatever it is. I believe the money market or the bond fund would be able to help you meet that objective. You just need to understand your cash flow and plan accordingly. Our investment application will really help you with that, where you can deduct at source and also, do that for a continuous period of time. So you could set a recurrent debit whereby you're debited on a monthly basis or daily basis, quarterly basis. You set it, you put a goal ahead of you, and you reach it. So this is just a vehicle that would pretty much take you to wherever it is the destination you want to go. And that's why we have different types of vehicles. We have the money market for short distance trips. We have the bond fund for a longer trip, maybe Lagos to Ibadan kind of trip, right? And that's where you see the bond and the Eurobond pretty much exist as well for you. So the choice is really yours. We've handed over the tools to you, and we'll of course be here as well to respond to further inquiries you may have as regards how this various investments could be of value to you. So return on the money market is about 4.7%. I said it's a shorter term investment, so the returns are a bit lower than what you would get on the bond fund. So it's just really understanding yourself as an investor. So thank you all for having me today. I look forward to your questions. You can drop them in the chat, or if there's a Q&A after, I would jump on that as well. So I wish you all the best in your investment journey. And just remember, as the MD referred to earlier, it's a continuous journey. It's not something whereby you believe, you just have to do it once. It's something you have to take step by step to really achieve this journey at the end of the day. So I wish you all the best.
Thank you very much, Ore. So you have a number of questions in the comment section. I have promised them that you will respond to the questions individually in the comment section. So thank you very much for that. I got two things from your, of course, conversation around investment. So the first is investment really is a personal journey. You need to know what your objectives are, and you need to know how to meet your investment goals. The second one I got again is investment or investing is not as complicated as people think it is, and that's why we're here as financial advisors, so of course guide everyone on the right path to financial freedom. Thank you very much, Ore. Quickly, we shall move to Erifemi Akeredolu, who is the head of private trust. Erifemi will tell us the importance of writing a will and how you can use our heritage trust to put your child's education on autopilot. Thank you. Erifemi, over to you, please.
Hello, everyone.
Hello, Erifemi.
Good morning. I hope that we've gotten one or two things from everything that's been said from our managing director, asset management, to the head of digital business, and to my super duper extra financial advisor, Ore. So a lot of people look at investment from just the bit of, I want to save money. Unfortunately, there is another side to investment. So let's see investment as a coin. You have the head and the tail. So let's say the head is when you think about risk and return and how you're going to save for a period called, let's say, time horizon. So if I say, you know what, I have plans of buying a G-Wagon. I like G-Wagon, by the way. I have plans of buying G-Wagon in 10 years, for example. So what's my plan for buying my G-Wagon? It will be that I want to start saving towards buying the G-Wagon, right? Then I will look at my income and say, what can I reasonably save from my income that would, accumulate that much with the return on it that would get me a G-Wagon. That is very fantastic. Good idea. Like our MD said, everybody's journey is different. Our objectives are different. What you want to do or your plan for savings is definitely going to be different from mine. But there is the tail bit of it, which is the other side of the coin. The tail bit of it is the preservation and transferability of those assets. So when you talk about asset, a lot of people would say assets, they would think house, car, land. No, your asset is everything that you own that can be tied to your name, meaning including your bank account, including your pensions, including any insurance policy you have, right? So it's not just only bank account, houses, cars, and maybe landed property, or maybe luxury item like your phones and all. Your funds that you are investing, according to what Ore just taught us or discussed with us, is also part of your asset. So the preservation of those assets is very important. And not just the preservation, but also how to transfer those assets to your loved ones. So a lot of people don't like to talk about wills, or I want to transfer my asset, because half the time we just feel, I'm young. Why am I talking about creating a will or a trust? I'm still, very young. I'm 25. In fact, I'm 23, I'm 35, I'm 40. I don't see a reason why I should be thinking about the creation of a will right now. But the truth is, you actually need to think about it. And I will tell you why. You see those assets you have created and everything you've accumulated and the funds and everything. God forbid anything happens to you right now, your loved ones might not be able to take benefit of those assets. So let's start from the simple part of the discussion. What is a will? A will is just a document. It is not a death sentence. Like a lot of people used to feel like, when I draft a will tomorrow, I'm presuming Irefemi is going to die in another 7 days. No, it's not. A will is just a simple document that just helps you collate your assets and tell how you want it distributed, right? Now, the problem is, in the absence of a will, your assets, like I've described, cash in bank, landed properties, your pension, your group life insurance, and all those other forms of assets, your shares, will waste away, in quotes, because your beneficiaries won't be able to take good advantage of it at the right time. So they might be able to take advantage of it by virtue of, they will go and get letter of administration, but at the end of the day, they will go through a whole lot of stress to get that letter of administration that can sometimes take years, right? Especially in this our climate that, things are not really straightforward, so to say. Now, the truth is, do you want to put them through that stress when you could have just drafted, even if it's a one-pager, for example, to say, these are all my assets, and in case of my demise, I give it to A, I give it to B, I give C. Just as simple as that, which is why a will is a testamentary instrument. When you say testamentary, it means that it does not kickstart while you're alive, it kickstarts when you are gone, right? And somebody, either a trustee like us or a lawyer, can, I can read that will to people and say, this is how you want your asset distributed, right? Now, I've mentioned that in the absence of a will, your beneficiaries might run into some tiny little problem. Now, another bit to it is, if you don't have a will or you don't have a trust on the other side is a living will. I'd mentioned that a will is testamentary in nature, meaning it kickstarts after one's demise. A trust starts now. That's why it's called a living will. It kickstarts now, meaning you can utilize the instrument while you are alive. Now, the truth is, for anybody that doesn't have either a will or a trust, in fact, let's just stick to a will. As simple as your pension. I don't know if you are aware that under the Pensions Act, you need to have a will for your beneficiaries to be able to access the balance in your account upon your demise. Meaning, even the so-called pension that the company had paid on your behalf, we know it's contributory, you pay 7.5, your company pays 7.5% to make up 15% of your remuneration. Or the company might be magnanimous enough to say, we are paying everything or we are paying more, right? So all those monies that they've contributed on your behalf all the years, when you are now retired, you took only a little bit of it. And when you are old and gray and gone, you still have, for example, let's say you still have a balance of like 20 million and it's just sitting in the account. And your beneficiaries cannot even collect the money because the instrument that will aid them to do it, which is called a simple will, you did not draft while you were alive. So you see that the benefit of a will is just more than death, or distribution. It also helps you put your house in order, right? It helps you collect. It even gives you an overview of what you have, what is truly yours. A lot of us will say, I have a land. The truth is the land might not be yours because you don't have what is called a right title to it. And if you don't have a legal title to something, you cannot transfer it to another party, being your beneficiary. So you find out that is in the process of people drafting a will or drafting their trust, you will now find out that, come to think of it, that land, they only gave me receipt though. I've not even done C of O. I don't even have a deed of gift. I don't even have a deed of transfer, which shows that you don't have a legal title to the asset, right? So I just hope that I've been able to poke a mind towards the fact that these things are also important, and that as my colleagues will be talking to you about shares, about mutual fund, about all sorts of investment, on the flip side of it, you are also conscious of the fact that, yes, I'm creating all these assets and wealth. However, I need to protect them to ensure that the person I didn't want to get my asset, that I didn't work for, is not the one that will get it at the end of the day. So for example, under some cultural or religious beliefs, you'll find a situation when somebody passes on and they would say the asset of the man goes to the head of the family and he can share it any way he wants, right? Because he didn't have a legal instrument like a will or a trust in place. I've even seen situations where they would throw the wife and the children out and the family members will just take over all the assets. Because as far as they are concerned, their culture states that if their brother dies or if their sister dies, they come to take all the assets. So you see that at the end of the day, we might work so hard and everything, but if we don't protect those assets and do the right thing to preserve our beneficiaries, they might run into trouble much later. Another bit to it is some people, their parent might have passed on as I'm talking and you're on this platform, and you've not even been able to access the asset of your dad or your mom or your great-grandfather. We can help you at United Capital Trustees to trace all those assets and get a letter of administration on your behalf and ensure that the estate is duly executed. So you see that it is not just about you. If you're on the platform and you're feeling like, oh, I'm young, you have parents. You can also advise your parents, say, Mom, Dad, I'm not saying you would die, but I just think we should create something that preserves our future. And you also should do same for yourself. So I will talk about heritage trust. Jola, if you could please move on to heritage trust. Okay, so while Jola is trying to come up, heritage, can you hear me, please? Can everyone hear me? Can you hear me?
Yes, we can hear you, Femi.
Okay, fantastic. Thank you. Okay, so heritage trust is another form of trust, but this speaks specifically to children or to minors. Now, you find situations wherein people will say, I want to save, I want to save, I want to save for myself, I want to save for my daughter. When my daughter gets to senior class 3, I want them to go to Harvard, and we'll be lumping all the money in the same investment bucket. And the day they call you from the village that the roof of Mama's house is leaking, you go into that same bucket, you dip your hands, you take 100,000, go and fix the roof. The day you are coming back and your car decides to play a prank on you, and maybe your tire got, flat or something, and you don't have easy access to cash. Next thing, you call Jola, my mutual fund, liquidate 10,000 from there. Your bestie comes and tells you, man, mommy's 70th birthday, we are doing it in grand style, and the Ashwebi is 50,000. You go ahead, you dip your hands into that bucket, you pick, you pay. The truth is, at the end of the day, if you really look at it, you see that there is no separation between the funds for yourself and the funds for your children towards their education or their welfare or their future, because you've commingled those funds in the same investment bucket. And when the need arises, and these needs will always come up anyways, you just go to the same pocket to pick those funds. So that was the reason we created Heritage Trust. Heritage Trust specifically speaks to children. This account helps you save for your children. Either you want to save in trickles, being periodic contribution, or you want to do a lump sum and you want to afterwards be adding to it gradually. Heritage Trust will help you achieve that. But the good thing about, one of the greatest benefits of the trust account is the fact that it's tied to the child, not to you. So you can't call Femi and say, Femi, I want to liquidate 10,000 naira. I will say, okay, fine. Can you please provide me evidence of what you want to use the 5,000 naira for? And you say, well, I just need it for myself. I would decline and tell you, oh, I'm sorry. I will smile and be polite about it and tell you that we cannot give you. But let's say you said, oh, my son's school bus fare, the bus fare is what I want to pay for. And this is the invoice from the school. Oh, yes, I am glad to pay. I will gladly send the money to the school on your behalf. Now, somebody will say, why aren't you giving it to me? I don't want to give it to you so that there won't be diversion of funds, so that you won't go and use the money to do something else. I will rather pay the funds directly to that third party to ensure that we keep track of the objectives, all the things you've set out to do for that child, so that we ensure that they are done. That's why we won't pay the funds to you. This account also covers not just education, it covers leisure. They want to go for summer, it covers health, it covers welfare, whatever it is, in as much as you want to do it for the child and not for yourself. The other benefit of it is it has an optional advantage of insurance. So you can decide to take an insurance alongside the trust account. And the insurance just preserves you against demise, permanent disability, or loss of job. Think about it. This this pandemic, a lot of people have died. They have possibly minors. At least they have family members, children, spouse. And just imagine for a second that they are the only breadwinner. So let's take, for example, let's say a man passed on, his wife is not working, and he didn't even save, like Ore had advised, and my MD had advised. They didn't put anything aside, and now they are dead. Just imagine for a second what will be going on in that family as we speak. I can bet my life on it that it won't be a rosy thing. Yes, they will be grieving the bit of they've lost a loved one. They would also be living in penury, obviously. So you see that it is very important that you save. However, it is also important that you categorize your savings. And in this case, Heritage Trust for your children. The good thing is you can either do you can do it in Naira, you can also do it in dollars. So if you have a projection that I'm paying school fees in Naira now, but in another 7 years, I'll be paying school fees in dollars because my child will be, maybe the A levels will be abroad. You can start saving for the two objectives. That is, you save one part in Naira, you save one part in dollars. And with a minimum of 100,000 annually that you don't have to pay at once, you can contribute over a period, or $1,000, you can start an Heritage Trust account. By the way, heritage trust account is not only for our children. You can do for your nieces, your nephew, or your ward generally, someone you feel responsible for and you want to contribute to their well-being in the future. So parents, aunties, uncles, even churches, NGOs, mosques can create an heritage trust for any minor or group of minors that they feel they would like to support for a period. And like I had mentioned, these funds are professionally managed. You earn interest. It's not just you're dumping money, no interest. You earn interest on it. However, it is tied specifically to that child. So to wrap up my conversation, it is important that you preserve all the things you've gathered, be it tangible assets, intangible assets. It is also important that we create something for the future of our children and not commingle them with our own personal objectives, so that we are able to stay true to that objective we've set out to do. Over to you, Jola. If you have questions, I'll be glad to answer. You can drop them in the chat box and I would reach out to you. Thank you.
Thank you very much, Erifemi. So just like Erifemi said, please feel free to drop all your questions in the chat section. Erifemi will pick them up from there. So Erifemi, I learned two things from your conversation around investment. So the first thing is we all need a will, regardless of if you have one land in Aja or one old Toyota Camry. Having a will is not for the rich alone. It's for everyone. And another thing I also learned is that it is advisable to set aside money for our investments, and we shouldn't mix all of our obligations together. So it's important to set aside a particular sum of money for our investments journey. Moving on quickly, we are going to take Abidin Alade, the head trader at United Capital. He will take us through how we can use the stock market to earn quick cash. So Abidin, over to you, please. Okay, while we wait for Abidin to come on board, please feel free to.
Hello, Jola, can you hear me now?
I can hear you now. I can. Thank you, Abidin.
Yeah,
Okay.
Thank you very much, Jola. And thank you, everyone that is on this call. We do appreciate taking out your time to join us today. So in the next few minutes, I'll be talking about how you can use investments in equities as another investment vehicle, to cultivate that habit of saving. So generally speaking, it's a common wisdom that investments allows you to build additional stream of income. And you agree with me that one of the things the COVID-19 pandemic has brought to the fore is to re-emphasize the importance of investment due to its far-reaching impact on individual finances. So unlike mutual fund, investing in equities is a form of direct investment, where investors buy stock of choosing company directly into their name through a stockbroker on the floor of the Nigerian stock exchange. And unlike mutual fund as well, investing in equities is not risk-free. But like we say in finance, the higher your risk, the higher the likelihood of your return as well. So just to put this into contrast, for instance, the highest federal government has paid on 1-year T-bill this year has ranged within 5.5% to 6%, right? But in the last 6 months, I'm saying, I mean from March to, we're still in September, right? A stock like Zenith has paid 2 naira 80 kobo in dividend, right? Over a stock price that has hovered around 1685. So if you do that math, that is around 14.8 dividend yield, right? Even our own stock, United Capital, has paid 50 kobo final dividend on a stock that has averaged around 2.85 kobo. That's about 17 naira 50 kobo yield, dividend yield alone. So if you extrapolate that, that is just in a period of 6 months. 6 months. So if you extrapolate that over a period of 12 months, you understand why it's common. So when you are looking at equities investments, don't let your mind go to risks at a deal breaker, right? So that's why we are here to give you tips that you need and to let you know that with the advancements of technology in the capital markets now, that aspect of risks has been toned down considerably, right? Has been toned down considerably. At this junction as well, it will help for me to let you know that investment in equity should be deemed a long-term investment, even though it has some short-term benefits like dividend payment, bonus issues, and the possibility of capital appreciation over a short period of time, depending on when you are taking a particular position. And also, I mentioned the issue of breaks not too long ago. It's also notable to understand the fact that although there's a risk of price fluctuation, if you've not sold a particular stock, so if you've taken a position and you've not closed it, you've not lost money in actual sense. So I mean, you buy a first bank today for 5 naira, and you are looking at a portfolio valuation tomorrow, is really 4 naira 50 kobo. In your mind, you are thinking, okay, my development investment is going down. But if you've not sold, you've not actually lost that, because in the lifespan of that investment, that same stock could trade 8 naira tomorrow. It could trade 7 naira tomorrow. So once you've had it in your mind that you are building a portfolio over a period of time, and it's a long-term portfolio, even when price do fluctuate, they have the potential to recover, which is why I would also add here that one of the key tips that I give investors that want to come into the capital market is that they ensure the quality of assets they are buying. So in as much you want to buy as low as possible and sell as high as possible, it is important to buy stocks of companies that has good fundamentals, that you know will stand the test of time. Next slide, please. Next slide. Okay, so I mentioned fine. So I mentioned few benefits like investment in stock, equities investment is usually liquid. So you get dividend, there's possibility of bonus issues as well, and there's capital appreciation. So what are those inherent risk? Is an high risk investment vehicle. So there's dividend volatility because the stock could pay 2 naira 50 kobo today. This year to next year it could be 2 naira, depending on what the economic outlook is looking at. Like next slide. So in terms of so like I said one of the reasons we are here is to demystify the issue of risks around equities investment. So these are just a few tips on how to do that. So what are those risks? Concentration risks. This is when you put all your basket in one head, and we all know that is usually not good in any ramification of life, not just with investment, right? So when you are building a portfolio, it's always advisable that you look into multiple sectors, right? So if you look at this COVID period, for instance, ask yourself, who are those companies that are doing well, despite COVID? So you agree with me that the pharmaceuticals are doing well, and the telcos are doing well, because we are having to work remotely more. Ordinarily, this investment clinic we are having today would have been held in one hall somewhere, right? Where we'll be seeing ourselves face to face. But due to COVID, and now it has changed the world globally. Now you do more of Zoom meetings, you take work from home and all those. And what does that mean? That means to spend more buying data. You spend more buying recharge card and all that. So the telcos will be doing well. Like I mentioned, the pharmaceuticals the other time as well, due to the needs, to really advance healthcare to be able to cope with this pandemic. So you say the telco. So when you are building a portfolio, and the banks too are doing well now because people are using their platform more. People now want to be saving for rainy day because they could see how all of a sudden the pandemic came and a lot of things had to stop, right? So you want to look at the banks as well. So what that does is it helps take away that concentration risk, which is the mitigant we put underneath as being diversification. So you diversify your portfolio. So there's volatility risk as well. So how do you take care of volatility risk? So today the stock that you bought 5 naira is doing 505, tomorrow is doing 405, next tomorrow is doing 520. How do you take care of that? It's to go long. Have a long time view to your investment. So what that means is you don't put your rent money in equity investment. You don't put your school fees in equity investment. So when you need it, you might be forced to sell at a loss instead of selling when the market is right for you to sell. Right. So that is why it's always advisable that you put long-term money, you deploy long-term money into equities investment. So we talked about liquidity risk as well. So how do you cater for that? You invest in stocks of companies that has good fundamentals. These companies are always liquid. If you want to buy and sell an MTN share today, it's easy. Like ABC. You want to sell a United Capital share today, you want to sell a Zenith Bank share today, a GTB Bank share today, Nestle Bank share today. If you have them in your portfolio and you need money and you want to dispose, they are easy as it comes. Then the market risks. How do you cater for market risks? How do you mitigate against that? It's to have a stop loss. So which is where your risk appetite, this is where your risk appetite comes in. So with every investment, so I want to invest, I want to take a position of 100,000 naira in any investment. I'm thinking, okay, what is my risk appetite here? Maybe it's 10% risk appetite, which means I could have to lose 10,000 naira. But anything above that, I'm pulling the plug on this investment. Right? That is what we call stop loss in our market. So once that investment touches that threshold, you put the plug. You don't need to be sentimental. You put the plug, go into another position that you feel would, take for instance, before this pandemic, probably if we're to have an airline listed in our market, you think them like this is a cash cow business. I should invest in this company. But the pandemic came, and there was lockdown, and as we speak, government just started opening up the economy. So if you are to have an airline share in your portfolio, what should you be doing? You should be selling, because in the next few months they won't be doing anything, which impacts their revenue going forward, and that would impact whether they're able to pay you dividend or not. And it also speaks to whether the price of the company would appreciate or depreciate, and we know the answer to that. So you have a stop loss and you pull the plug when the time comes. Next slide, Jonathan. So few mistakes that we need to also avoid as investors. Waiting for the right time. The right time is now. So depending on your investment objective, you don't have to have 1 million. So you have it in mind. Investment is good, and you understand the Japanese market, right? You see people queuing, you're having long queues at GTB, at Zenith, at UBA, and you're asking yourself, and you're one of their customers. But how are you taking that information? What you are seeing, that experience, how are you taking it to your own bank? Every year, every month, you're banking your millions with UBA, you're banking your million with GTB. But at the end of the day, they're not getting much. They're not paying you much. So what is the interest they're giving you on your savings? And they are doing well. So how do you take advantage of this? How do you bank that information? What you know? Is to invest in them. And you don't have to have 10 million to do that, but you could do it over time. A 50,000 investment, a monthly 50,000 investment will come to 600,000 in a year. If you had a 10% dividend yield, that is around 60,000 naira. That takes it to 660,000 naira. So if that same investment gives you maybe another 5% capital appreciation, you begin to do the math. So and you ask yourself, am I better off putting this 600,000 naira in my GT account and just keep it there, or do I deploy this money to make money for me? So, and I mentioned emotion the other time. Investing is with emotion. It's also a common mistake. Aviation's sector will suffer. You are carrying an aviation sector stock. Why are you holding it? The fact that you are selling it today doesn't mean that if their condition changes tomorrow, you can come back and buy them, right? So expecting overnight return. So everybody is buying the stock. When I joined the market as well around 2007, I did the same mistake. I wanted to invest. I saw people buying lots of insurance stock, and they told me we'll buy today, it goes up tomorrow, we'll sell. And I fell into the same pit, but that's not how it works, right? People that bought Nestle during the crash, people that bought Nestle shares at 100 Naira plus, people that bought GT shares at 12, 11 Naira, those are the ones that will really not tell you anything bad about the market. But people that bought iron insurance, all sorts of insurance companies, some companies that were not even listed because they were cheap, they will tell you today they lost 100% of their investment. So the part that an investment is cheap, or someone is telling you that you could double your money, so why would you buy one that will grow over time? You could double your money if you put your money here, right? Those are one of the mistakes that we make when it comes to investment. Investments ought to grow over time, gradually. Then investing without a plan. I mentioned the fact that you don't put your school fees money in an investment. You don't put your rent money that you need in the next 2 weeks. That is more or less, that's close to gambling. Because what happens if in 2 weeks' time that you need the money, the market is bearish? When we say the market is bearish, that means there are not a lot of activities. The market is looking dull, prices are down. You'll be forced to sell, and you have to sell at a loss. But if you had a plan, a clear plan, that is a 1 year investment, a 2 year investment, in those 1 year or within the 2 years, there will be times when the market will be rallying, when we'll have a bull run, when prices will be trading up. Those are the times you want to turn over your portfolio. You want to sell and go into something else that you think is currently being underpriced, right? So next slide, Jonathan. So I mentioned the fact that technological advancement has made investments in equities less riskier than it used to be. So gone are those days where anything that happens in the market today, you have to wait for your broker to tell you the next day, right? Because you don't see it. Only your brokers has that live, that real-time data field. So you have to rely on someone telling you, you know what, during trading today, First Bank was going on, people were interested in MTN or in Dangote Cement. Gone are those days because of technical advancement. Now, my colleague introduced you to Invest Now earlier. With that platform, which is our own trading platform, with that platform, at the comfort of your home, at your offices, you could open a stock account. Under 24 hours, you get your unique trading account number. You could go ahead and fund your account, right? And you know what? You could also execute a trade. And I know some of you will be asking, but how do I know what to buy? We've gone a step further. InvestNow is one of those apps in the market that has that research capability. So it has the capability for those stocks we cover about a basket of around 57 stocks out of the 168 listed on the floor of the exchange. So the app has the capability to tell you the right time to buy a stock. So if UCAP is trading, say Zenith is trading at 15 Naira, and the research people feels that is a good entry price, the app tells you on the recommendation page that this stock is a buy, right? If during that trading day, it moves from 17 Naira and our target price is, let's say, 17 Naira, immediately its recommended changes to a sell. So invariably, you don't really need to know much about the market. All you need to know is which ones are the quality stocks, right? How much do I have to invest? What is my risk appetite? What is my investment objective? What kind of returns am I looking at? So what is the nature of the money I have to invest? Those are the notices you need to have. Once you know all this, with Invest Now, the system helps you to do the rest. All you need to know is just know where to go and make the decision today that you want to start investing in equities as part of your investment portfolio. Next slide, Jola. Hello, Jola, next slide. Next one. Let me quickly talk about our next one. I think Danny would, like my colleague said the other time, so we'll send everyone on this call, we'll send them these just to know the step-to-step guide to opening an account, downloading, opening an account on InvestNow. I want to quickly go to U-Trace so I can have time to take one or two questions before I leave the call. So we understand the fact that during the crash of 2007, 2008, a lot of people got their hands burned in the market because one, they didn't understand the market. Two, there was no technology, so they couldn't follow the market in real time, unlike what we have today. So today, if you go into the market, you take a position in the morning, and during the trading hour, you are making money. You could quickly sell. You know, your broker can't front run you. When we say front run, so anytime during those days, some brokers, when something good is happening in the market, they do it for themselves first before they take care. So they take care of themselves first before they take care of any other, their clients, which is unprofessional. But it happens a lot because these informations are hard to track, right? Because the guy is there, he's calling you to let you know what is happening immediately. And he's like, for instance, United Capital has more than 24,000 clients. So who do I call first? Right? You understand that no matter how good I am, I can't service 24,000 clients at the same time. But technology has come to take away those kind of barriers. But for the backlog, for those that have gotten their hands burnt, U-Trace on our platform is there to help you still unlock the values that you've missed in those investments. So probably due to the fact that you lost interest because they depreciated drastically, you've lost interest, you've abandoned those investments. Some don't even know that dividend accrue annually on short investment. Some investors don't even know the meaning of dividend. Some have bonuses, somewhere, because during those boom, every year, most of these companies, they give bonus issues, right? So with U-Trace allows you, with U-Trace, we can help you unlock the benefits of such investment. Be it that they are in a dead house, be it that you have it in multiple houses. With U-Trace, give us the information, give us all you know about this investment, would help you reach out to these houses, reach out to these registrars, consolidate them, and ensure that you get more value for investment. And you know what? The good thing about U-Trace is we are not even charging upfront for this service, right? We are not charging upfront. It's free. At least the initial part is free. You are paying us at the end of the day for whatever we help you recover. It's pegged at 10%, but it's also negotiable. So for instance, you have like 10 million out there that you are not even aware of. All you need to do is just give me a mandate to help you search the market, help you see if you have investment that you are not aware of. I'll do the legwork. I'll reach out to these guys, do all the documentation and all that, consolidate them. At the end of the day, I'll give you a report that says that, you know what, Mr. Wale, based on the mandate you gave me, I've reached out, I've done all my findings, you have X amount of money, and we've been able to recover this. Not even just giving you the information. We'll recover it, and we will tell you the day those monies are paid into your account. And on the back of that, you pay us a 10% on such recovery, which is, like I said, is negotiable if the volume is good. So the next slide. Okay, so like I said, the MD of Asset Management mentioned earlier, investment is a journey, right? And so it's something that you have to do deliberately. So equities investment is there as another vehicle that you could use. Don't let the risk scare you. With all that we have in place in the markets now, investment in equities is as easy as it gets. It's as easy as it gets. You have the system there to guide you. You have the professionals there to guide you. And due to the advent of technology as well, we are able to do more. In 2008, you won't be having this kind of investment clinic. But because we have more time now to service our clients, because most of them, they do their transactions on the web, on their app, then we have time to, give this additional value. So let them know, how they can move their investment journey to another level. At this point, I would say thank you very much for listening.
Thank you very much, Abidin. You all must agree with me that we've had a really, really insightful session this morning. Abidin, you have a couple of questions in the chat section. Please help to answer it. And we will have someone that is happy to see you without a suit today. So you are very popular, Abidin. Okay, so I just want us to do a little bit of something outside what we had scheduled to happen. So everybody should please bring out their phones now. We're all going to be downloading the Invest Now app. So Invest Now is our investment tool that allows you to open an account, like Damilare said, fund your account. In fact, it puts you in total control of your investment. So it's available on Android and iOS as Invest Now. So please feel free to download the Invest Now app on your phone now. You can also visit our website, investnow.ng. There you have access to all our investment products, and you can, of course, open an account on the spot. You can also follow us on social media. We're on Twitter at United Cap. You can also follow us on LinkedIn, Facebook, and Instagram at United Capital PLC. Please feel free to speak with a United Capital financial advisor. We're always available to guide you on the right path to financial freedom. You can send me a direct email on mojola.show-ojerinde@unitedcapitalplcgroup.com or damlaremeshumo@unitedcapitalplcgroup.com, or you can send to us at info@unitedcapitalplcgroup.com. We'll be very, very much happy, of course, to link you up with a financial advisor. Just like everyone here said earlier, investment takes patience. Investing is patience. You need to be very careful who you speak to about your investments. No one can double your money in minutes, in seconds, or in hours. You need to, of course, know your investment goal and stay through to that journey. You don't need 1 million to start investing today. You can start with as low as 5,000 Naira. Please feel free, like I mentioned, to please contact us directly. You can use our email addresses displayed on the screen, or you can send us an email at info@unitedcapitalplcgroup.com, or you can follow us across our social media pages. We are very much available and happy to guide you on the right path to financial freedom. I do not want to take too much of your time. I know in the comment section, people have asked for this presentation. We promise that after the session, we shall send an email with the presentation to you all, so you can have access to it as well. Thank you very much for your time. We do not take it for granted. And I remain Omojola Shiwonjeri, the Product Manager for Invest Now. Thank you very much and have a wonderful day.